Welcome to the deep dive. This week, we're really digging into the global
Yeah,
markets.
cutting through the noise.
Exactly. We're looking at the Global Market Weekly Report, the one ending July 18th, 2025. And it's not just about, the numbers. It's about understanding the bigger picture, geopolitics, commodities, currencies, all the forces shaping things. We want to pull out the key insights so you feel genuinely clued in.
That's the goal. Connecting those dots. Not just what happened, but the why behind it, how it all weaves together. So let's get into it.
Okay, let's start with the U.S. markets. The report, it shows the Dow Jones slipped on Friday, down about 0.32%.
Right. And for the week, barely moved, down just 0.07%. Closed at 44,342.19.
But here's the interesting bit. The S&P 500 and the Nasdaq Q, they're actually up for the week, 0.59% and 1.51%.
Even though the S&P was, slightly down Friday and NASDAQ slightly up.
So quite a split there. What's that telling you? What drove that difference?
Well, the report points pretty clearly to one thing driving the Dow down. It seems President Trump is reportedly pushing hard for more EU tariffs.
Ah, the trade talk again?
Yes, the Financial Times mentioned he's demanding a minimum of maybe 15 to 20% in any deal, and you see that immediate impact, right?
Hmm.
Especially on the Dow with its big industrial companies.
Well, the S&P and Nasdaq Q, more tech heavy.
Exactly, they held up better. It really shows how specific policy threats, or even just talk, can hit certain sectors harder than others. It wasn't just general market gloom.
That's fascinating how one potential policy move creates such a clear divide. Okay, so while the US was dealing with that, what about Europe? Their market seemed kind of mixed on Friday.
Yeah, a real mixed bag. You had the FTSE 100 up a bit for the day and the week,
Okay.
but then the DAX was down on Friday, though still slightly positive for the week overall.
And the CAC.
Pretty flat Friday, but down a bit for the week. And the broader S2XX 600 also dipped slightly.
So, not a clear direction, even though the report mentions companies recording largely positive earnings. That feels a bit counterintuitive.
Well, it highlights that classic market tension, doesn't it? You've
Uh-huh.
got good news on the ground, solid corporate performance, which provides support.
Right.
But then you have these bigger overarching worries, like the U.S. tariff talk we just discussed. Those global trade uncertainties act as a real headwind.
So it's a tug of war. Good earnings versus geopolitical risk.
Precisely. And it seems like the risk factor, the uncertainty, was just enough to overshadow some of that positive earnings news, leading to that mixed close. Multiple factors always at play.
Okay, let's shift gears from stocks to commodities. The real basic stuff. Crude oil seemed pretty stable.
Relatively, yeah. Brent September, down just a tiny bit Friday, less than 2% for the whole week.
And WTI August, similar.
Very similar pattern, down 0.34% Friday, about 2% for the week.
So with everything going on sanctions, wars, how did oil stay so calm?
It really comes down to this balancing act. You had mixed U.S. economic news, which maybe hinted at, slightly weaker demand down the road.
Okay, that would normally push prices down.
Right. But offsetting that were these ongoing worries about supply. Specifically, the EU's latest sanctions against Russia over the Ukraine war. The market's wondering if that could eventually tighten up oil supplies.
So potential demand softness versus potential supply disruption.
And they sort of canceled each other out this week. It led to this relative stability, even with big geopolitical events happening. Shows how complex the market calculus can be.
Makes sense. What about precious metals? Gold was up on Friday.
It was, yeah. Up 0.3% for the day, though still down slightly for the week overall, about 0.45%.
Is that just the classic safe haven play, uncertainty driving people to gold?
That's definitely a big part of it. The report links the rise to a slightly weaker U.S. dollar that day, plus, yes, that ongoing background noise of geopolitical and economic uncertainty. It's the go-to asset when things feel risky. Interestingly, though, platinum backed off a bit. It had hit its highest price since, 2014.
Wow.
Yeah, so it shows that even within precious metals, you get different moves based on their own specific factors. Industrial demand for platinum, for instance.
Okay, and then the big mover, it seems, was palm oil. CPO futures jumped.
Oh, significantly. Up 2.5% on Friday alone.
And over 3% for the week, highest since April, the report says. What's behind that surge?
This is a really clear example of policy driving prices. It's all about Indonesia. There's a lot of optimism, or maybe expectation, that their ambitious biodiesel mandates are really going to tighten supply.
So Indonesia's using more palm oil domestically for fuel.
Exactly. They're a top grower, so if they mandate higher domestic use, that means less available for the export market.
And that pushes global prices up.
Directly. It underpins the price. A straightforward supply-side story driven by government policy.
Got it. Okay, finally, let's look at currencies and crypto. The US dollar seemed to slip a bit.
It did, yeah. Against several Asian currencies, the ringgit, the rupiah, the baht, also softened against the euro.
Eurodollar was up 0.43% Friday to about 1.1647.
Right. Though, important to note, the dollar did hold on to its gains for the week overall.
Okay, so just a bit of a dip on Friday. And Bitcoin.
Bitcoin saw a dip too, down about 1.3% Friday and 0.65% for the week, settling around 117,411.
So focusing on the dollar's movement, that Friday dip despite weekly gains. What's the story there? It's always complicated.
It really is. The report suggests investors were weighing a few things. One, signs that those tariffs we keep mentioning might actually be starting to push inflation up a bit.
Okay. Inflation concerns.
Yeah. Then you mix that with what people expect the Fed to do, policy-wise. And crucially, the report explicitly mentions President Trump increasing pressure on Fed Chair Jerome Powell.
Ah, the political angle again.
Exactly. So
Yeah.
the market's trying to figure out, okay, we see maybe some inflation signs. What will the Fed do? And how much political influence is there on the Fed right now?
That's a lot to juggle.
It is. And the dollar's movement, even these small shifts, kind of acts as a gauge for how the market feels about inflation and maybe about central bank independence in this environment.
So pulling it all together after this week's deep dive, what's the main takeaway for you, for our listener? We've seen these direct links, haven't we? Tariffs hitting the Dow, earnings fighting geopolitics in Europe, Indonesian policy boosting palm oil, political pressure potentially nudging the dollar.
Yeah, the connections are becoming really explicit.
The US dollar seems like a real focal point for all these crossing pressures.
I think that's right. And what really jumps out, stepping back, is how often political influence is now being directly cited as a market mover. Not just policy outcomes, but the actual process and pronouncements.
It's not just economics 101 anymore.
Not at all. And that leads to, I think, an important question for you, the listener, to ponder. As these global markets get more and more tangled up with direct political actions, with specific mandates, with public pressure, does that make them more volatile? Or, in a strange way, maybe more predictable if you're just watching the political winds? How does that change things for the everyday investor trying to navigate it all? Something to think about.